Welcome to a capital hungry breakdown on gold. So we're just going to be talking about the precious metal overall and why gold from a global scale is seen as such, is why it's seen as a precious metal and why it has so much value, right? This literally goes back hundreds of years, hundreds and hundreds of years ago, back to when you would literally trade gold coins for bread in the market, right? Because because of the precious metal outlook gold has had, it's the literal appeal it has had. It's literally given value, and it was used to exchange for goods back in the day, right? With economic evolution and the way industry markets, everything evolves, the way the markets inflate, you could no longer carry 100 gold bricks with you to make purchases day to day or do what you want to do day to day. So as the markets and everything developed, you had these dollar bills created that would be backed by gold and represent the gold standard, right? This gold standard gave money a real basis, and it kept control of money because you could only have so much money in the markets related to how much gold there's actually available for each country. That's a whole different topic to talk about, and to talk about how the Federal Reserve created their own sort of standard for the dollar when they started creating these loans, right? Because back in the day when you used to have an American dollar, American $20 bill, you could take that to the bank and exchange it for the equivalent in gold, right? Because that's what the dollar would be backed by. That's what it would say on the note. Now it just says on a note, if you see a $20 American bill, that it's a Federal Reserve loan, right? That's one of the reasons the U.S. and the Feds have gotten themselves in so much debt, because they've been printing money out of thin air and creating these Federal Reserve IOU and these loans and injecting the economy with really nothing. And when you do that and you inject the economy with nothing and you keep creating bullshit on top of bullshit, eventually the economies collapse and you see stuff like the credit collapse, the stock market collapse, the mortgage crisis, right? That's just a quick overview of that. So on a historical level, and due to inflation and just due to pretty much due to economic history, that is why gold has had so much value and it still retains its value to this day. And because of its value as an actual solid precious metal, and countries stocking up on this metal for decades and centuries, just in case of any economic disaster, in case anything happens where real cash flow gets gets harmed again, right? Where you can't use real cash flow, or these economies or stock markets, etc., crash, and you go back down to the gold standard. That is the at the core principle, the safest haven possible, right? Because that's where the original exchange for goods started for, was with gold. If you really want to think about it that way, right? So gold, and because of that, you also have to understand that on a market level, no matter the currencies or what's going on an economic level, if there's geopolitical tensions or if there's stuff going on that if that impacts countries interconnected or impacts multiple countries, or it's gonna, or stuff like the trade war, for example, or real war, you see countries or investors as a whole run into gold as a safe haven because of that, and that is historically proven, and it's because of the foundations I told you guys about, right? So what we want to know recently is a quick summary is why gold, the way it's trended from 1200, which of course you can tell in the higher time frame, it's been on this technical trend, touching these points since about 2016, right? It's been in this channel. It's finally created a higher high out. But the whole reason gold has broken out, now that you understand the safe haven value and understand how gold really works, is because of the trade war tensions, and because of Trump wanting to weaken the U.S. dollar to then get rate cuts, which would look great for corporate America, which would look great for the microeconomy in the U.S., and which would make Trump look like an American hero and make America great again. Because he's been trying to weaken the U.S. dollar, he has created this conflict with the trade war, where instead of trying to, if he can't get the rate cuts, he's trying to get money into the U.S. by any way possible, and that is by taxing countries that have had great trade ties for decades with the US, right? Including China, the European Union, all these countries. He went after India, Mexico, right? So he's gone after all these countries. This geopolitical tension has caused an issue with countries around the world because he's causing trade tie issues with global players such as China, who then in there have to adjust their import and export with other countries, right? The ripple effect of the trade war is massive. So you really want to understand that, right? So because we understand how big gold is and how globally impacted it is, because we understand the trade war tensions and how that's impacting multiple countries because of the ripple effect of the import export, how manufacturers from microeconomy to macroeconomy have to adapt to changes in price of their goods, their manufacturing, their production. There's so many things that have a ripple effect from trade war that gold just became so heavily inflated, and you also had other factors that came into this just to help give gold even more bullish fuel, right? So some of those factors were in reply to this trade war stuff, in reply to Iran getting sanctioned, you had China and Russia start dumping U.S. bonds, right? So how do U.S. bonds and gold and the U.S. dollar all work together? or this foreign investment in anything? Well, U.S. bonds, you have to understand, are basically like the stock of the country as a whole, right? So when you have a company and that company has a stock, it basically is telling you the performance of that company, right? If you're seeing Apple stock and for the last 3 months Apple stock has gone down 10%, right? You're gonna ask yourself why, and you start looking at the performance of that country, right? So, or for an example here, now when you have a U.S. bond, it's pretty much giving you a health check of the entire U.S. economy as a whole, but it's also showing you the amount of foreign investment cash flow into the country based on good ties and relationships, right? On these IOU principles, right? So basically, when the U.S. goes into these economic cycles and these bonds become extremely low, it's just like a stock that's really low, and these bonds get bought up by different countries and foreign investors such as China and Russia, right? And then when these bonds are bought up for an exchange of cash flow, that cash flow gets injected into the U.S. economy, which then flourishes the U.S. microeconomy and the U.S. markets. And it's basically like a deal saying, thank you for this cash flow right now. We're going to use that to grow. Whenever this bond matures, this 5 to 10-year bond, we're going to pay you back with that interest on top of your investment. It's just like a stock, right? That's how that whole works. When you have this trade war tension going on, and you have the U.S. and China dumping these bonds, they're cutting their investment short and taking a short-term loss to hurt the U.S. and devalue the U.S. currency. When they did that and they devalued the U.S. currency, and you had these trade war tensions escalating, and you had Iran sanctioned and some geopolitical tensions getting bigger, you had that massive break that broke the 1350 historical weekly area that has not been broken since 2016. And you had this bullish flag play out in this massive peak at 1550, which we haven't seen these highs in 6 years, right? So we understand now what gold is, how it works, how it gets its price, right? We can talk more about gold as well in another webinar, because we're going to talk about how gold, because it's so globally impacted, it has these set contract prices between institutions, because you can't have price move too hectically, too crazy at once, because people think that this move was something crazy or out of the ordinary, but when you look back historically here, what I'm going to show with this breakout and this bullish flag pattern that happened, it's just something that gold does when the market environment is set for gold bulls to be that strong, right? So we had the geopolitical issues and the tensions for gold bulls to be that strong. And so when you're looking at how why gold did what it did, it makes perfect sense that with everything that was going on, the market conditions, the information about U.S. bonds, how China kept increasing gold holdings, how Iran was sanctioned, how the US trade war kept escalating, how Russia and China were dumping US bonds, and the bond yield curve was inverting and US bonds were at their lowest ever, right? All that information bubbling up creates a perfect storm for gold to break into record highs. And it also shows you as an investor, as a trader, to start gauging, okay, now I've learned a lesson. I know what kind of tensions, what kind of issues impact gold and by how much. And I can do some historical analysis and have seen this happen before in the past. But now in real time, I have seen this happen and I know what happened day to day, and I can start to take advantage of this, right? Because at the same time, what goes up must come down. And what I want to highlight now is that there are going to be some intraday bullish plays that we could take advantage of. But when we're looking at this past market structure, right, what we want to know is the last time gold did a very bullish rally was in around 2016 when there was a lot of economic weakness as well, right? And what you saw was another historical area that hasn't been broken for a long time, which is around the 1200s. You saw a rally break up. You saw this bullish, you saw this bullish flag pattern play out on the weekly, where price was consolidating. A heavy breakout, right? A breakout to a new high. Exclude some of the noise, right? They break out to a new high. This new high peaked at around 1372. And then you had heavy impulsive sells down to even come back and test that original weekly area that was broken. So for weeks, it would look like this area would not be tested again, right? Because you saw this heavy impulsive move up and break up, which is something similar to what we're seeing here, right? We have gold ranging and becoming very bullish. We have all those tensions and everything building up, everything on the table building up. We have this historical resistance at around 1350. We have everything lined up and brewing up for the perfect storm for gold to break it, right? We understand the chain of events, and we see something similar to happen to the left side, where we have for a few weeks gold play in this bullish flag pattern before it breaks out to create a new high, and then we have that consolidation and price build up there, right? We know why. We understand the historical analysis now that this is how gold behaves. We know why it behaves that way. We know why gold is a safe haven. We even know why gold is why it's gold and how it was used for trading fucking bread back in the day, right? We understand all that and know the impact of bonds on gold, the impact of global trade, these tensions on gold, potential war, and all that. We know all that impact, right? So now, understanding the roadmap, understanding some historical pattern analysis of if we see downside, we're gonna see a heavy correction. But what we really need to see downside is to validate current event relief points, right? So we need trade war relief points, and we need overall Iran war relief points, and we can see some short-term tension relief with that. So what do we have going on right now on the table, right? We have to understand that right now we do have a bit of that trade war bandage with that bit of tension relief, and also with recent headlines, we understand that even AUD got a spike with these recent headlines that China is going to be purchasing more soybeans, or there's going to be more soybean purchases related with the tariffs, right? So that's a positive and helps support some of the issues that Brock. So what happened last week to bring gold where it was now was some of the issues related to agriculture and Trump speaking on with the Australian Prime Minister about China needing to buy more U.S. agriculture, right? Now with these headlines related to the soybeans, you have a bit of counteracting of that measure, and you have a bit of validation to see some downside breakout, right? What we really want to see on the weekly level is to see if we break back above 1530, because then we have some more technical validation to see some upside. We want to see the current events that follow with that, right? Currently, you have the United Nations meeting and a bunch of countries meeting. You have Trump posting on his Instagram and Twitter about meeting with Japan and having some good trade deals coming and signing an initial trade deal next week. Meeting with Poland, meeting with Pakistan, India. So Trump has been making his rounds, and especially related to the whole United Nations message about peace. he has been laying off the trigger a bit, and especially the tone he set last week, he sort of already counteracted those measures, right? We really want to see what he does right now and how he moves price and how he further develops those tensions, right? Because if he further develops those tensions, especially with the war on Iran, then you're going to see some bullish momentum and you're going to see a break of that 1530 on the intraday, and we can long that back up to 1550. Because as you can see, when gold enters these sort of bullish flag plays or these sort of ranges on daily and weekly, it can get very messy, and that usually is due to a mixed sentiment on the market, right? So I guarantee if you backtested what was actually happening back in 2016 during these times, it would be a lot of mixed sentiment in the market compared to what caused the bullish flow or what caused the seller's impulsive down, right? So what we want to look at now is the range we're in, because we understand we do have a lot of exhaustion at 1550. We do have a lot of pressure on US and China to come to a trade deal agreement, but we also have some current event tensions and mixed tensions on the table with the war on Iran developing, the whole Saudi Arabia oil issue, as well as anything with this trade war bandage that gets fucked up, right? So we want to make sure that once we zoom in the time frames here, what we can take advantage of, because when the time does come and we have a trade war deal, for example, or we have the Fed supporting the US dollar further, or Trump laying off the trigger a bit more, and you get that break to the downside and we get that relief, we're going to see a strong mirror play of this kind of seller's impulsive move that we can start to take advantage of, right? Because the overall image here is what I want to show with the market structure and the historical analysis, especially in higher time frame, is that history does repeat itself a lot. And when we're really looking at market structure, and you look, sorry about that, and you look at this sort of trend we're seeing, you will see gold sort of come back here. I'm not saying anytime soon, it could be next year, but you will see gold come back to test premium buy areas on an institutional level, even at 1360 or whatever. When you see that impulsive sellers play down, we really want to focus in here now, but we just want to quickly talk about, summarize some principles about gold, the foundations of how gold works, some of the technical historical principles of gold and how it behaves, the reasons why gold is bullish and how it got to where it is and why it broke into historical highs and the current events that got here, and what's currently on the table as per relief and tensions, and what can cause some mixed ranging, but what we can try to take advantage of on an intraday play until some higher time frame, either longs or short setup, once we have either a break above or below this sort of bullish flag that's setting up, and with the fundamentals and current events that line up with that. So when we're looking at gold on the weekly level, we want to notice that there's a lot of seller sensitivity here technically. We understand that we don't have the validation to break above 1550 yet. Some validation points to break above 1550 would be escalations with the trade war. A lot of this trade truce broken. The escalations with the war on Iran and Saudi Arabia and US were resorting to more violence and actually entering into Iran with military force, right? Those kind of reasons are when you will see oil inflate and gold break this high, retest, and it would easily push up to 1600 plus, right? That would be the next range. Would be, even on the monthly, would be around 1620 here, especially as you can see how the pip, how price moves per pip on gold, especially on a weekly level when it does break out and has all the heat there to break out, and it makes these major moves from like hundreds of dollars, right? So we would see that $50, $70 move where gold would peak to 1620 if we have the tensions break out there, right? What we want to watch right now is that we have US GDP data this week. US PMI data and manufacturing data itself was not bad. The Fed sentiment they have left is no more further rate cuts. So when they're signaling that no more further rate cuts, it's showing that the US economy with one more rate cut that they cushioned in was just sort of as a defense measure, and inflation and all that stuff is still on target. We saw that inflation was showing signs that it is on target, especially with CPI and other data figures that we've seen recently. So we also just want to see how US GDP runs this week. Everything else that runs after these United Nations meetings, and how this trade war bandage continues, right? If there's still continued trade war relief talks, right? Like US continues to wanting good talks, China continues to wanting good talks. They have a good meeting when they come to the start of October. They have a good meeting with China and they come to some kind of first round deal. Then you're going to see that influence to come test down the lower side of this range to 1485. And if we break 1485 with that kind of trade war relief, and there is no war escalation with Iran, and that sort of simmers down again, then you're going to see that price come retest 1400 on the higher time frame in a few weeks of motion, especially if US GDP stays strong, the Fed stays on their approach of no more rate cuts, and Trump stays on the positive side of trade war deals and promoting good deals with Japan, Poland, China, these countries he's been speaking about, right? Because overall the trend is extremely bullish. Even if you have pullbacks to these points on the higher time frame, you understand that gold is still forever bullish as a safe haven, but market cycles are just bound to happen, right? So this is what I'm talking about, where when you're looking on the daily, you've entered this kind of range, and these are the intraday ranges we're going to try to peek into and take advantage of. And it's something very similar that happened here, except we had further validation to break out here, right? So when the market was ranging up and down here, it's extremely messy. It can destroy accounts. It's extremely hard to swing trade this as well unless you already have a buy position early and you're not dealing with this noise because you're waiting for the overall macro view of the bullish pressure. But other than that, you want to be in and out of these within days or within a 4 to 6 hour intraday range, and you want to understand the current events going on to play up and down these ping pong ranges until you get further validation for that push up, right? Understand that once you have these historical kind of areas created or these support and resistance created, you do get that technical retest, or that you do get the chance to catch that buy or multiple days on a pullback to enter more, or once you enter a new trend, right? You see how the market moves and the market structure moves in your favor when all the fundamentals are there, right? Because of the current mixed tensions and everything that's been going on, we have created this range more of in here between 1485 to 1530, with the high peaked around 1550 to 1555. That's why I'm saying on an intraday level, for us to take advantage, it's either we're going to have further trade war tension relief points and we're going to see a downside on this range and a further break of 1485, or any trade war escalation is then when we can take advantage of a break and retest of the 1530s area, because then we have a clear break of all this wick, all these noises, the seller's wall, the seller sensitivity area to the left, and you have a cleaner break of and you have a cleaner range to play with within this $20 range of 1530 to 1550. And if anything with like the Iran war or trade war escalates, and you already have early entries from 1530 where you scaled in at 1540 and we break into new highs, you're going to see something like this happen where, and that bullish wedge pattern on the weekly continue up to 1600. That's when we'll continue up to 1600, right? What we have to watch is this range now, because we don't want to get bitten in this range. We don't want to get stuck in this range and lose money in this range unless you are scalping it on an intraday level and you understand the current events day to day that are fueling gold buys or fueling gold sells. Otherwise, this is a lot of noise that can destroy accounts, and we have seen historically how gold moves like that. So pretty much now as well, you have to understand on a higher time frame, gold is generating a lot of liquidity for a move up or down. This move was up, and we understand why it was up, right? This move is currently pushing down, and we understand why it can be pushing down, as we had the seller's impulse off of 1550 in that peak. We have price testing this 1525, 1520 area. We want to see how it really reacts to this now, right? So once we zoom in on an intraday level, I already shared my analysis when we were showing the trending market on the daily, and we saw these higher highs peaking, right? And we saw the same price do the same thing at 1485 in this overall bullish market structure, and we took advantage of that, right? What now we want to take advantage of is once we zoom in on the intraday, do we have enough juice to break above 1525, catch that retest, and rally it up to 1550? Or are we going to respect this sort of range and resistance created as you've seen here to the left? And are we going to have strong US GDP data? Is the US consumer confidence report going to be strong as well? If all those factors are strong in supporting US growth, and we have this whole United Nations meeting keeping Trump in a good behavior mode, and he's focused on trade war relief and trade war deals, then you're going to see just this resistance be respected on a technical level, further downside back to 1485, 1490, and even reasons to break that, right? Because he's already made some short-term deals with Japan, talking about deals with Poland, talking about further soybean purchases with China, right? We have that on the table. We just really have to assess the headlines as they come and see if we have the fuel to break this area. Otherwise, I don't really want to mess with this entering in the middle of this range right now because it's very noisy, right? This is what I mean. You can see that clearly on a historical level, once you enter this area, there's a lot of seller sensitivity and noise as soon as you start respecting it. We're already seeing something like that similar happen. You had the double top peak at 1550 without further validation to break that. The only thing now is, of course, you have that support at 1485. You have that trending market here from 1505 and that break and retest up. This is all we have to watch now. We have our first area of interest here. We have our second area of interest here, our third area of interest here for bearish movement, right? For bullish movement, we need a break of these wicks here at 1525, right? That's our first area of interest. Our second area of interest would be here around 1535. It would break there. And then our third area of interest would be 1550. Everything else in between here is just noise, right? So what we want to take advantage of on an intraday level is if we can get continued validations to respect this sell sensitivity area plus trade war relief. There's nothing being spoken about the Iran war. U.S. bonds stay fairly neutral or start rebounding and getting purchased up again by foreign investors. You see U.S. markets continuing to stay strong, the dollar index maintaining its highs, right? Stuff like the consumer confidence report rebounding strongly. And you have a bunch of validation for gold to come to the downside, respect the seller sensitivity area, and then we start seeing these three areas of interest of entering here, entering at a break of 1510, 1508, and then entering at a break of 1485 again to scale down positions. And then if it breaks 1485, you know we're seeing heavy correction on the higher time frames, and we'll see the current event and headlines plus US data to confirm that, right? Otherwise, on any bullish momentum, we're looking for breaks above 1525, and we understand why. And I'm going to share an intraday chart that's a lot cleaner of this, but I hope this makes sense to understand what we're looking for this week. We understand that some of the European EU PMI data, especially from Germany, the manufacturing data, caused a lot of upside as well because it showed a lot of weakness in the euro. It showed the euro needing a lot of stimulus, but the U.S. PMI data was mixed. Was one report was bad and one was good, right? So you had that sort of offset, and you had to sort of peak this resistance here and failure to break above their sense, right? So also understand that Trump is in good moods with the whole United Nations thing. The trade war bandage is still on. You have a bunch of intermediary first preliminary trade deals being made, like the ones with Japan. and you have some good talks coming on the tables, right? And a potential rebounded or on target consumer confidence report in the morning. Home sales is tomorrow, and then you have the US GDP, right, which is the end of the week. And if that continues to be on target, then there's no reason for gold to break above higher of 1530, and it just helps US markets rally and the risk appetite increase of investors, and you see safe havens start to deplete further, right? So we're really watching this seller sensitivity area. We're going to watch the headlines, and we understand that anything with the Iran war, anything with trade war, anything we hear about bonds being at record lows, or China and the US having further issues, we know that's going to cause gold to inflate and other safe havens like the yen and Swiss franc to inflate, right? So that's the breakdown for gold, some historical analysis, some pattern analysis, um, a breakdown from weekly, daily, 4-hour areas of interest, how gold really works, what to look for, and what's really on the table right now, and why Trump is even in a good mood, right? We talked about a lot, so this was a good one.